Hello and welcome to Blocks Live TV. Today is Friday, February the 22nd. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo and 3:30 p.m. here in Malta. The cryptocurrency markets have been relatively stable after surging on Monday, and most of the assets are fluctuating between gains and losses. We'll now take a closer look at the market in today's live Crypto Now show. We'll start with the cryptocurrency index CCI 30. It's been hovering above the 2,300 point level during the recent days. The index is still up by more than 20% month to date, and 5% is in the green since January the 1st. The 30-day Bitcoin volatility index stood unchanged at just slightly more than 2% yesterday, and it's been level for 2 days in a row. It posted a slight increase on Tuesday following Monday's bull run. The 24-hour traded volume indicator continues trending lower, and more than $10 billion have been given up from Tuesday's high, as the total value of transactions measures at $24 billion. Markets have settled down, and Bitcoin dominance indicator shows no change, standing at 52%. The top 5 digital assets show a limited rate movement. Bitcoin continues trending slightly south of the key $4,000 support resistance level. Ether has faced resistance around the $150 mark, but support appears to be forming at $145. XRP has been trending lower since Monday's rally, and it currently stands near the 32-cent level. EOS posts a 2% increase as it looks to test the $3.90 resistance line. Litecoin managed to break above the $50 yesterday, but the coin has since retreated. The Coin 360 heat map shows most of the assets are in the green, but the moves are overall muted. According to the Token Spread website, the CX exchange has the biggest buy and sell side difference for the Bitcoin dollar at 0.1%. The Coinbase and Bitfinex exchanges show the biggest intermarket spread of nearly 3%. We'll now take a look at some of the characteristics of Quantum. It's an open source public blockchain platform that looks like to combine the functionalities of Bitcoin and Ethereum. The platform provides a standardized, stable, and safe development environment for smart contracts and development applications. Quantum is the first smart contract platform to use proof of stake algorithm for verifications, thus lowering transaction costs. The initial offering of their token took place on March of 2017, and all of the supply was sold out in less than a week. The tokens were initially priced at 30 cents, and they peaked to more than $100 in January of 2018. As of today, the Quantum token can be purchased for slightly more than $2. Well, now let's move on to assess the performance of the digital assets based on their use case. The Messari website groups cryptocurrencies into 5 distinct categories. Starting with the infrastructure group is up by less than 1%. Most of the assets are trading higher, with some rare exceptions like NEO and IOTA. The media and entertainment category is the only class that trades in the red, but it's virtually unchanged. The financial sector is the top performer with a solid gain of more than 4%. There are both significant increases and drops among these virtual coins. The currency category is up by nearly 1%, and most of the assets are trading higher. And lastly, the services section has also increased by almost 1%. The day is mixed for these cryptos, and there are both gains and losses. Well, this is where the 5 major cryptocurrency categories stand so far on this Friday. We'll now focus on the most significant moves among the top 100 cryptocurrencies to identify the top winners and the biggest losers. Integration of fiat currency services can be a major boost for cryptocurrency exchange tokens, and this is the case today. The cryptocurrency exchange Liquid announced a partnership with Simplex, which allows Visa and MasterCard Euro deposits with other currencies to follow shortly. This has been a positive influence on today's platform Cash token, which is up by a massive 30%. This is enough to put it back on the list of the top 100 assets by market cap. The Status token has made a move further above the 2-cent level, and it's up by nearly 9%. The Aurora token usually attracts plenty of volatility, and it's up by 8% today. The Ontology coin is on its way towards the 80-cent zone, with a rise of 7%. The bullish week continues for the VeChain coin. It's gained approximately 25% over the past 7 days to approach the half-cent level. Now, most of the digital assets are trading sideways, but there are some pullbacks as well. The repo token posted a sharp increase yesterday, but it's currently down by almost 9%. Trading is relatively light with a daily traded volume of under $80,000. The Populous token shows a decline of 5% as the correction extends. The Odin token dropped earlier in the week, and a chaotic downtrend has continued today. The Komodo coin rose above the $1 mark on a number of occasions during the past week, but it's once again trading lower following a decline of close to 5%. The Chainlink token is down by nearly 4%, which has wiped out most of the gains that were accumulated during the past week. These were the top 24-hour moves during the European morning trading session on this Friday. We'll now join our crypto expert and analyst, Jason Fernandez, COO and co-founder of A-Token. Hi, Jason. Thank you so much for joining us once again today.
Hi, Jessica. Happy to be here.
Thank you so much for joining us. Now, a few crypto analysts have said that Bitcoin continues to struggle to break through this $4,000 resistance level that we are seeing. The less likely of the price is the number one cryptocurrency will rise. Is this true, and how do you explain this phenomenon?
Yeah, I would agree with that. I think Bitcoin is testing the $4,000 resistance level, but it seems to experience a pullback every time it hits that number. And of course, that indicates a strong selling pressure at that level. The key metric to look at going forward would be volume, because if volume picks up, Bitcoin would have an easier time crossing that 4K mark. And sustained volume trading could push it up to 4,300 in the near term. On the other hand, if volume pulls back significantly, Bitcoin might stick in a holding pattern around the $3,900 range. And then basically wait there until some other catalyst comes through that might push it above the 4K level.
And you mentioned volume there, Jason. Now, the Bitcoin daily traded volume, it hit a 9-month high in the past few days, but it's since retreated to around $7.5 billion. So this could be another sign that the price of Bitcoin is likely to pull back. What's your opinion on this at the moment?
So I think the volume has tapered off slightly. But we have seen that with the overall crypto market as well. So volumes in the overall crypto market are standing at about 24 billion over the last 24 hours. And that's still much higher than the 15 billion it was just 2 weeks ago. And also the total market cap stands at 135 billion. So we haven't really seen a significant pullback in terms of price. It might pull back briefly as traders take a profit off the table. But I believe it's a temporary pullback because overall the fundamentals remain strong. So I think the interesting thing about this recovery is that it wasn't limited to Bitcoin. It was the overall market itself seemed to all rise around the same time. And I think that means that this wasn't simply a case of people moving money from altcoins into Bitcoin, and that these funds actually came from fiat money. And I think that overall, even if this is a temporary pullback, I think it will rally because I think that overall the fundamentals with Bitcoin are strong. So recently, eToro released a survey that said almost half of millennial traders have more trust in crypto exchanges than the U.S. stock market. And also, 59% of those respondents said they don't trade crypto. That said they don't trade crypto, which said that they would invest more money in crypto if it was offered by a traditional financial institution. So you could see how something like Bakkt or Bitcoin ETFs could really change the game for 59% of these respondents. And something like 92% of them said they would feel more comfortable investing in Bitcoin if it was offered by more traditional financial institutions. So we see that coming down the pike anyway in 2019. So I think overall, Bitcoin only has one place to go in the larger scheme of things, and that's up.
And that's a really interesting point that there's definitely a market there. So if we move over, a popular cryptocurrency trading group on Twitter called Trading Room, it recently said that buying a potential BTC pullback could be a highly profitable trade. Can you explain what they mean by this and how this works?
Sure. Pullbacks are widely seen as buying opportunities after a token has experienced a large upward price movement. So, for example, a coin might experience a significant rise following positive news, and then experience a pullback as traders with existing positions start taking profit off the table. So, most pullbacks involve coins moving to an area of technical support, such as a moving average or a pivot point, before resuming the uptrend. And we've seen that essentially happen where we're essentially flirting with the $4,000 range. So that would sort of be the pivot. But I think it's really important now to watch the price because traders will have to watch the key areas of support because a breakdown from that area of support could actually signal a reversal rather than a pullback, and that wouldn't be good.
And earlier on in today's segment, Jason, you did mention the fact that we have seen a recovery pretty much across the board. We began talking about the correlation of Bitcoin and altcoin the other day. What needs to happen for this correlation to be broken, and what would be a good for the crypto market in general? And would that be good?
Right. So, I mean, correlation isn't necessarily a bad thing in and of itself. The question really is, why is that correlation happening? So in a relatively young market, which we know is dominated by retail investors, negative news and behavioral biases tend to affect, these non-institutional buyers. And that's why we see that normally the correlation is higher when the market slides and the correlation is less when the market improves. That's because bad news affects all cryptocurrencies, whereas good news tends to affect the specific currencies that that they refer to. So another reason would be essentially sometimes you see the correlations due to investors looking at cryptocurrencies more as a group rather than individual projects that each have their own trajectories, and that's a bad thing because negative news will come at some point. And if that happens, and if it's correlated because investors are looking at it as a group, then that would push the entire market down. So basically, the market needs to mature. But I think the correlation this time was more of an effect of strong fundamentals in the altcoins coupled with strong BTC demand rather than the correlation itself bringing those coins up.
Okay, and you mentioned there that the market needs to be mature. Now, earlier on the week, we spoke about Mitsubishi Financial and JP Morgan launching their digital assets for payments. Well, today, another Japanese financial giant, Mizuho Financial Group, has announced the launch on March the 1st of their J-Coin for transactions and payments. Now, what's interesting about this, Jason, is this digital asset will be connected to the accounts of 53 million clients. So there's an apparent trend here where major players are diving deep into crypto. How will this affect the market in the short and the medium terms?
So JP Morgan, for example, their cryptocurrency is will be used to transfer funds within the bank. With MUFG coin, Mitsubishi Financial coin, users are basically encouraged to acquire the coin, and then that coin will be used at various restaurants and point of sales, etc. And to some extent, that obviously represents a closed loop. Similarly to Mizuho, they've essentially partnered with 60 banks. And essentially what you end up having is disjointed solutions that will end up resulting in different islands of commerce. And the problem is that a bank-issued digital asset can only really efficiently settle between the banks who issued it. So unless these large coins figure out a way to transfer seamlessly between each other, you're going to end up having major fragmentation. So we see this essentially multiple banks coming out with their own coin. You have Citicoin and Goldman Sachs has Settlecoin. So the result will be an even more fragmented currency landscape than we have today. And if banks of different digital asset groups want to settle their trades with each other, they'll then have to make markets between their unique digital assets and then trade between their digital assets and a common fiat currency. That seems like an awful mess. So ultimately, what is the real question is how these coins and these tokens are going to start talking to each other. And I guess what's going to end up happening more likely is that we're going to start seeing some consolidation and basically larger players either buying out or absorbing some of the smaller players. and ultimately only there being a few major players in this industry.
And do you think once we see that consolidation, we'll finally be able to validate and say that the markets are in fact mature?
Yeah, I mean, I think so. I think like we saw with the dot-com bubble, what seemed to end that is there was a period where a lot of the smaller companies ended up being bought out, and then those companies um, essentially started working with other companies, and once those, then you started having a lot of mergers, and that's really then we ended up with Amazon, Apple, and these massive players, and that's really what ended up. Sort of bringing the dot-com companies back, and I think that'll end up happening with crypto as well.
And now, just finally, how realistic are predictions that the price of Bitcoin could hit, for example, $1 million? We've got the Vice President of Blockchain and Digital Currencies for IBM, Jessie Lund. She said that she sees this event actually happening, justifies its validation, and then one Satoshi would be at parity with 1 cent. This in turn would create $20 trillion of liquidity in the network. Can you comment on this as well, please, Jason?
So I think his theory is basically that if Bitcoin had a higher value, there would be higher levels of network and market liquidity, and that would allow banks and institutions to get acclimated to the cryptocurrency much easier. So essentially, higher valuations of Bitcoin and other cryptocurrencies would see more traction with the incumbents in the legacy financial world. But I think and yeah, I mean, obviously that's a situation of math where if there's only ever going to be 21 million Bitcoins. So if each Satoshi is basically works out to 1 cent, that would create $20 trillion of liquidity in the network. That's just simple math. But in reality, Bitcoin would have to grow organically. So if there wasn't already a demand for Bitcoin at that point, and with that many, with the total 21 million tokens, and at that liquidity rate, at that price, then obviously the demand wouldn't match the supply, and the price would plummet. So I'm not really sure. Yes, certainly it could go to $1 million because we're talking about a finite amount. Ultimately, we're talking about a finite amount of Bitcoins. But the chances of that happening anywhere in the near future, even in the next few years, I think are slim to none.
Okay, well, fantastic. Jason, thank you so much for joining us on the line throughout this week. It's been an absolute pleasure to get your insights. Thank you very much for your time today. Well, now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. Well, cryptocurrency markets remain mostly range-bound, but a slight uptick puts the total market cap at approximately $135 billion. Trading activity continued slowing down, and the 24-hour volume measures at less than $24 billion. Bitcoin is once again looking to test the key $4,000 resistance level. The cash token remains the most bullish asset, but the 24-hour increase has moderated to 27%. Well, that's all for this Friday's Crypto Now live show. We thank Jason Fernandez of A Token for his expert analysis. And we thank you, the audience, for joining us, and invite you all to accompany us every weekday at the same time.